Welcome back to Market Matters, your guide to understanding the Indian stock market. Today, we're going beyond the basics to understand how the stock market truly functions, not in theory, but in real-life action. Let's get into it.
Once a company gets listed on the stock exchange, after its IPO, it becomes available for public trading. That means you, me, and every retail or institutional investor can buy or sell its shares freely on platforms like NSE or BSE.
The stock market isn't just numbers and graphs. It's actually a digital space where people trade opinions. Some think a stock will rise, others believe it will fall. When those views meet with matching prices, a transaction happens. Real-life analogy. Imagine a cricket stadium. Some fans say their team will win, others aren't so sure. That difference in opinion, that's what creates the buzz. And in the market, it creates trades. Stock prices change based on news, investor emotions, company updates, and even global events. A good quarterly report might drive a price up, but one negative headline, it could fall like a stone. Let's say you place an order to buy 100 shares of Tata Motors at 800 rupees. Here's what happens behind the scenes. Your order is sent to the exchange. A seller with the matching price is found. Trade is executed. Shares get deposited into your demat account. When you buy shares, you're not just trading numbers. You actually own a part of that company. It's like holding a small piece of their business in your digital wallet. You may also receive dividends if the company shares profits, voting rights for key decisions, bonus shares in some cases. This depends on your goal. A short-term trader may exit in minutes or days. A long-term investor may wait for years, riding out ups and downs. Example: buy at 100 rupees, sell at 120 rupees, you've made a 20% gain. But if that happened in just 3 months, that's a much higher annual return than it looks at. Not everyone in the market plays the same way. Here's a quick breakdown of different types of market participants. Scalpers. They enter and exit in minutes. Day traders. Open and close trades within the same day. Swing traders. Hold positions for a few days to weeks. Investors. They stay in for the long haul, often years. Pro tip: try different styles in a virtual demo account before putting real money in.